So, the markets. There's jitters all over the place because of this DeepSeek AI story. And a couple of comments were like, Tino, why are you spreading FUD? Anyways, this is how the markets work. Buy the rumor, sell the news. Well, today we had a sell the news event. On top of that, you had the carry trade principle, which I'm in the understanding that the carry trade principle has now been priced in. Unless something manic happens tonight in the Asian session, it's unlikely that we're going to see really bold price action because we have got a few more announcements to be released. You've got earnings from the big tech coming up. You've also got the FOMC. And the word on the street is that the Fed's going to be a little bit less reluctant to cut as aggressively as the marketplace would want them, which is why investors are heading over into the bonds market. In tonight's video, I'm just going to highlight some areas in Bitcoin that you need to be aware of and anticipate that the volatility coming into the future could be an opportunity for you to take advantage of buying Bitcoin at specific points. So we're going to break it all down for you as quick as we can so that you can continue about your day. Let's get with the program, ladies and gentlemen. There's an old saying in the market that says, buy the rumor, sell the news, and that's what this DeepSeek story is all about. The article goes on to say about what it is with this DeepSeek that's got investors so concerned. The only concerning thing about it is the fact that it's really more cost effective. Okay, and it does give the user a little bit more flexibility when it comes to solving problems, i.e. prompts and what have you, to give the user the experience of being able to just take advantage of the intelligence that DeepSeek has. Well, where have we heard that before? ChatGPT, OpenAI, Meta AI. So I'm asking myself the question, is it really something to be concerned about? But what we've got to be concerned about is what this could lead to. This is not FUD. This is the reality of things. This could effectively lead to a trade war. The only way that the US can really prevent this from really developing is to prevent China from getting access to high power processing GPUs. Well, that's already been the case. Scroll down into the article and it goes on to say that the US, Washington, has banned the export of high-end technologies like GPU semiconductors to China in a bid to stall the country's advances in AI. Now, what do you think that's going to lead to, ladies and gentlemen? They ain't going to be too happy about that. On top, you got some good old tariffs from Trump. Well, what's going to happen? When you get these sort of articles, guys, it proves that the market is irrational. But now that the news has been released, the only thing else that could really scare everyone is if this DeepSeek does actually outperform and do something significantly better than ChatGPT. Well, if they ain't going to get the processing power that is needed, even though it claims that it can do it as more cost effective compared to any existing open model, AI model, well, we got nothing to worry about. So all you guys saying that what I said earlier on was FUD, nah, man, I was just telling you what the news was saying to people. And if you don't want to hear about FUD, then you're on the one side of the story. And you could be scratching your head wondering, hold on a second, why is everything going down? Never mind, we're to the moon. Wake up, man. You don't want to be having that sort of thought. Anyway, going into Bitcoin price section just to break it down for you. So, Bitcoin. Interesting, huh? We go back to the 5th of August, we can tell that Bitcoin dropped then, and then it started to make a move to the upside from that point. What news do we really have that's concerning about DeepSeek? Nothing. It's just irrational behavior from the marketplace. Everyone's now calling it manipulation. Come on, man. We've had so much worse information about cryptocurrency, worse information in the stock market that has led to the market going down, but it didn't really go down. I mean, not as bad as what this is, but we just had the carry trade principle unwind. And I believe that the carry trade is done now. We don't need to worry about it. Why? Well, let's just go and have a look at the yen right now. What's the yen doing? After all that big move to the upside, carry traders have now unwinded their positions in dollar. They've got out. Now they're going to be looking for another rate of return. So they could be getting back into the yen again, coming back down. That's what we would be expecting. Going over into the dollar dominance, you can see dollar is trying to claim its ground back up again, still appreciating by 7%. And if you look back at the last time that the dollar, or should I say when the yen started to move up aggressively, that yen trade itself, the dollar's value was way less than what it was before. They were selling their dollars way less than what they were when they last unwinded the carry trade. Okay? When they unwound the carry trade. Is that even a word? Never mind. Right now, the carry trade unwind is being done at 7%. Appreciation on the dollar. So they're all good. Now, with that being said, you can see the dollar is starting to try and make ground to come up. Going into this week, we're getting data tomorrow. Core durable goods orders, consumer confidence. I don't think that's going to be even relevant. But have they used this week, or should I say the start of Monday, false move week beginning, as an attempt to really manipulate the markets to bring everything back up on the expectation that the Federal Reserve on Wednesday is going to bring the flavor and give traders the expectation that interest rates are going to come down? Well, maybe that's already going to be the case. Why? Because investors right now have gone aggressively into the US bonds. The 2-year yield has taken a nosedive to the downside. The 10-year yield, I'm not even interested with that. It's going down to 4.5%. That's still relatively decent. However, the bonds market is starting to move up. And as long as the bonds market keeps on going higher, then investors are starting with the expectation that interest rates are going to be cut. That means they're going to earn less of a yield in the future. So they're going to lock it in now. That means Fed's going to come out and say, yeah, we're going to cut the interest rates, but we're going to hold it for a little bit. Market would have already priced it in because the bonds will be moving up until that point. Where does that leave you with Bitcoin? Okay, then. Well, Bitcoin right now is currently sat at these lows, and Bitcoin is a little bit of a nut job going into the order flow. You can see we've got some bids down here. We've got 20 million at 97,036. We've also got another bid order down here. I believe it is at 97. There we go. Yeah, 97.36. And there was another one for 90. There you go. 96,520. Okay. Zooming out, would you be under the impression that there are still people wanting to sell Bitcoin? Of course there are. Look at this big fat order up here, $25 million at 110,000. Maybe the FOMC is going to bring us the volatility. But listen, if the Federal Reserve holds its interest rates, which is what they are expecting, they're expecting the Fed to hold the interest rates. But it's what he says in the press conference. If he gives us any inkling that the Fed is dovish in any sort of way, wow, everything will shoot up. Everything will shoot up, ladies and gentlemen. So would you not think that this move to the downside was just another attempt to buy Bitcoin on the cheap? Maybe. Maybe. Exploring in the crypto space, yeah, nearly $1 billion worth of liquidations have come into play. Now, let me give you a little bit of a tip, if you will. Whenever you see a massive influx of liquidations coming into play, go back in time and look at articles when lots of liquidations have been met, okay? Whether it's longs or shorts. 8 times out of 10, the opposite direction is getting ready to occur. When you've had such an influx of liquidity leave the marketplace, because remember what leverage trading is, you're borrowing money. What's that rate that you're paying every 7 hours? Yeah? And any money that is borrowed, open interest, any of that money that is borrowed needs to come back. So $1 billion worth of liquidations have come into play with cryptocurrency. Happy days. Why is that a good sign? Because it gives us an insight into what we can expect into the future. The markets in principle, or leveraged markets, derivatives, they've all reset after this big drop. Going into the price action of Bitcoin, we can make the assumption that maybe Bitcoin could be basing out at these lows. In front of you is a range. Now we've got the Asian session high and the Asian session low. And going into tonight, I'm going to be letting the Platinum members know exactly what the next game plan is, because it's been a tough day for the markets. But we're going to be getting ourselves primed and ready for what looks like maybe a relatively decent Asian session. Okay, so you want to get involved in that, go check out the Platinum membership in the description of this video. Now, with that being said, if you notice that when the futures markets open again in the evening, because they are closed for an hour, if the NASDAQ futures start to climb up, usually cryptocurrency climbs up as well. This Asian session low is going to be a very important point for Bitcoin going into this evening, but more so going into the rest of the week. The logic says that if Bitcoin breaks beyond the Asian session low, it's probably going to trade away from this point and go lower. Is it possible? Most definitely, ladies and gentlemen. Is that FUD? No. It's the reality of where prices can go. They can go up or down. You're in the realm of uncertainty, man. You've got to accept that it can go up, it can go down, but it's the time duration that you spend in a positive trade or a trade that you're favoring a specific direction. If they're not spending the time going in your direction, Asia is going to show whether or not this low right here is the low of the week. It could be the low of the week. What we need to see happening is the NASDAQ to continue its move to the upside. Okay. Now, NASDAQ right now is currently forming a move away from the lows. This is a V-shaped reversal. I traded this logic earlier on today. It was on my personal account right here. And we're effectively in around £9,500 worth of profit. I opened the trades earlier on, but I've been scaling some of these trades. I've opened quite a few trades on this. Not that many, but we've got around, so we've got 3 positive trades and 3 negative trades, but the positive trades are effectively paying for themselves, okay? And what I'm looking for here is the NASDAQ to effectively do this rise, retrace, continuation out, okay? My entries were all the way down here, and the reason that I took the entries down here was because the volatility index was giving me a sign that they were going to get ready to start reversing price. What do you hear me saying all the time? Buy when it's high. When it's high, you buy. When it's low, you hold. That's the old saying, okay? But let me just put that into perspective for you. Going over to the volatility index, what I witnessed on that was this red vector candle, or should I say the green vector candle couldn't come into play and close at the highs of the range, okay? So I started to see the VIX coming down. That was a clue for me to start getting ready to open my trades. And that's what ended up happening. The volatility index started to break down. I started to take the trades on the positive expectation that NASDAQ was going to make a recovery back up. And it was a very decent recovery to the upside, okay? Now, with that being said, if I go into the smaller time frames, because that's what I was looking for, if you go over and you can see you've got a big, massive red vector, green vector candle right here. This red vector candle right here was the clue for me to take my long, which is where you can see right here on the chart, that's where my longs were. On the open of that candle, you see here, this is the 1 hour time frame. In that hour candle, that's where I started to take my longs on the NASDAQ. We managed to see the success of the move, and now I opened a couple of trades right here, a couple of positions, and now we've seen a bit of a drawdown, and of course, they're now starting to make a little bit of a recovery back up. So as long as NASDAQ can sustain itself and make the move to the upside, happy days. If it goes against me, I'm going to set myself a stop right here, break even, never mind. If I don't make any money on the move, never mind. I want to get a bigger move on this because I'm trading back up towards the recovery of this gap right here. And if I get that, happy days. If I don't, never mind, I break even. I took a trade for free of charge today. Never mind. Some of you might say, close it and take your profit. We're not in for the dental plan, ladies and gentlemen. We want to make money in the move. And I'm applying the logic that the carry trade now is done. We're now going to see the yen go down and the stock market is now going to climb back up until we get our good old news announcements, which are coming out tomorrow. So to finalize everything, today's been a bit of a tricky day. Be careful with what news anchors you're reading and what information is being provided. Just refer to the charts. The less risk you take on, the more information you can absorb if price does go against you. And you can say, okay, maybe the market is not going to like that information. It's gone against me. Or maybe it's going to work in my favor. Happy days. Let me add some more size. But we're going into the FOMC this week, and that's going to be in the next 24 to 48 hours. It's Wednesday. So prepare yourselves. Don't worry too much about what the guys are saying on the street or any YouTubers or whatever. Fundamentally, look at the charts. And if the charts are showing prices breaking down and it doesn't even look like it wants to go any further, then guys, wait. If you want to do your DCA and start buying Bitcoin, then fine. But just wait until the FOMC is done. We're going to have a good idea of what we can expect on whether the dollar is going to continue higher or not. And that's naturally going to have an impact on Bitcoin going higher or not. Mad love and respect, ladies and gentlemen. Hit the like button, subscribe on the way out, and I bloody blink too much. Peace.